Hello traders, welcome back to another video. In this video, I will be discussing about the mitigation block. So, what is a mitigation block? A mitigation block is basically a failed order block. A mitigation block is just a failed breaker block, right? We are bearish, we form an order block, and price failed to displace lower and continued higher. If you can't imagine, that's alright. I will explain more in the next coming slides. Alright, unlike breaker block, mitigation block can be traded through, right? This concept, the mitigation block, we don't use this concept to enter trades unlike breaker block, right? This concept, we only use this as a confluence. This is only used when it is paired with a breaker block. Alright, so if you remember, this is what breaker block looks like, right? We are overall bearish, we are forming a down close candle, and then we form an up close candle. This up close candle is an order block. This order block right here should provide resistance to price and continued lower. But since we failed to respect that order block, it's now called a breaker block, right? We want to see price find support into this breaker block and continued higher. This is what a breaker block. But a mitigation block failed to go lower and take out this sell side liquidity, alright? It's basically a failed breaker block, right? Because breaker block takes out this swing low and continues higher. Mitigation block, on the other hand, failed to take out this swing low right here, but still continued higher. So once again, we are bearish. We are forming down close candles. And then we form an up close candle. This is a possible order block, remember? If only we took out this swing low and continued lower. But in mitigation block, price failed to take out this swing low right here, alright? This is neither a breaker block or an order block. These up close candles right here are called a mitigation block. Price can still find support in this area, but not strongly as a breaker block because price can trade it through in this swing lows right here, because as we can see, it kind of formed a trend line liquidity, alright? This is a mitigation block. It is neither a breaker block or an order block. This up close candle right here is a mitigation block, alright? Still, we want to see it find some kind of support in this area and continued higher. Alright, so here are the difference between a breaker block and a mitigation block for you to see exactly their difference, alright? So as we can see, we are bearish, right? We form down close candle, just like here. And then price should disrespect this swing low right here in order to become an order block initially, right? But price failed to do that in the mitigation block, alright? So basically the up close candle right here is mitigation block right away, since it is neither an order block and a breaker block. And as we can see, we have shifted higher and price find support in this area and continued higher. So this is what a bullish mitigation block looks like in a live market example. So we are bearish, we form down close candle, and here we form an up close candle. This is a possible order block if we continue to go lower, taking out this swing low. But since price failed to take out this swing low, this is now a mitigation block. Price continued to go higher and it finds support in this mitigation block and continued going higher. So, how do we use a mitigation block, right? This is the only thing we need for a mitigation block since we don't trade this mitigation block by itself. Alright, so we only use a mitigation block as a confluence to a smart money technique or SMT. Alright, so here is an example of a bullish mitigation block. Alright, so here once again, we form a failed swing right here. We failed to took out this swing low right here, right? So here we have a mitigation block. And here we have a valid breaker block. So here is how we use exactly a mitigation block. Alright, so this is a bullish example. For example, we have a higher time frame PD array that we reach. For example, a 1 hour fair value gap. We reach right here, alright? Both. These two price action right here are what we call correlated asset, right? Just like Euro USD and GBP USD. What do you mean by correlated asset? Correlated assets basically means pair that are moving in the same kind of movement, and typically they move in the same kind of price action. Alright, so when we have crack in correlations just like this, we can anticipate very high chance of reversals. Alright, so for example, this is the price action on Euro USD. And this is the price action on GBP USD. Since these two assets or pairs are correlated with each other, we expect them to move in the same way. Alright? So for example, if this pair took out this sell-side liquidity, we want to see also this pair took out this sell-side liquidity. But since this pair right here failed to took out this sell-side liquidity, we see a high probability confluence, which is what we call an SMT divergence, which means the price is most likely to reverse because the other pair failed to go lower. Alright? This basically means that this pair shows us that it's not willing to go down and that this pair right here took out this sell-side liquidity as a liquidity grab. Alright? So as we can see right here, we have a mitigation block. And as we can see right here, we have a breaker block. Alright? We can use this mitigation block as a confluence to our breaker block. As we can see, we have here an SMT divergence, which means this is a higher probability setup. Alright? In this case, we should enter on the asset or pair that took out a liquidity. I only enter in this kind of setup. I don't enter in this setup, alright? Because the price can take out these swing lows right here because we form equal lows or trendline liquidity, alright? But in this pair, we form a very strong breaker block. As we can see right here, we have an order block, a breaker block, and a fair value gap. We can enter right here, and the price should now continue going higher. Now, let's go on into the bearish mitigation block. As we can see right here, we have another SMT divergence. This pair took out this buy-side liquidity. But in this pair, we failed to take out this buy-side liquidity, which means there is a crack in correlation. This pair right here only took out this buy-side liquidity as a liquidity grab. And this pair right here shows us that it's not willing to go higher. As we can see, we have a crack in correlation. We have here an S&P divergence, right? We took out this buy-side liquidity right here, and we failed to take out this buy-side liquidity. Here we have our mitigation block, and here we have our breaker block. Where should we enter our trade? Like I said, we should not enter in this kind of setup because the price can take out these swing highs right here because we form equal highs or trend line liquidity. We should only enter in the setup that form the breaker block because it's a higher probability setup. As we can see right here, we have our order blocks right here. We also have our breaker block right here, overlapping into fair value gaps. So this is a high probability setup. We enter right here on the breaker block, and the price should continue going lower. Alright, so remember, we only use mitigation block as a confluence, not an entry setup. Alright, we only use mitigation block if it is paired with a breaker block. Alright, so that's it for this video. I will see you on the next one.